Earnings, the management of J.K.Lakshmi Cement is with us. Dr. Shailendra Chouksey is a whole-time director now joining in. Thank you so much for taking time out and being with us. To begin with, can you start off by telling us a little bit about what have been some of the key highlights in the quarter gone by and how exactly your realizations have shaped up?
You see, the major cost increase, as I was mentioning, is on account of the fuel price, which affects both our fuel as well as power, as our power capacity is mostly captive. So there we had a double whammy. One, that the Supreme Court has already put an embargo on usage of petcoke in the thermal power plant. Actually, they had first banned the use totally. But then in December we got a relief, and from January we could start using petcoke back in our kilns, but in thermal power plant we still are not able to. As a result, whatever saving we could accrue out of using petcoke in place of coal, there we lost out. And of course, the fuel price all around have gone up very substantially. If I were to really compare the landed cost of our petcoke, just to get a sense, which earlier was about 6,700 rupees, today is over 8,000 rupees. So we saw a very steep jump there, and though we increased our efficiencies, we have cut down our power usage by close to 5 units per ton of cement. But I think what we could say was nothing compared to the cost increase that took place.
Going forward then, can you tell us a little bit about some of the various issues that are plaguing the industry, especially in terms of the usage of petcoke, and how that is going to impact your company going forward?
No, the petcoke availability is not an issue. The issue is the prices, the international prices, which have gone up on account of the oil prices going up. So on one hand, we get affected.
We were in conversation with Mr. Shailendra Chouksey. To continue our conversation, let's talk about capacity utilization and how do you see this shaping up for the rest of FY19?
In this quarter, our capacity utilization was close to 83%. Our clinkerization was over 90%. But then cement utilization was lesser. And I think going forward, this trend of demand we expect to continue, and there have been some minor correction in the non-trade price, and I would expect that we shall be able to get back some of those orders which we purposely lost out because of the low price, unremunerated prices. So I think we'll be able to improve our capacity utilization by at least 4 to 5% in the last 2 quarters. Second quarter is in any case a monsoon quarter where the volumes get affected.
Okay, that's the view coming in. And Mr. Chouksey, do you see prices firming up? What is the outlook on your overall demand?
You see, in normal course with this healthy demand, the prices should have picked up. But because of the surplus capacity, the prices continue to remain at very unremunerative level where the costs are not being fully compensated for. But I think by increasing better capacity utilization, by better efficiencies, we'll be able to overcome the non-increase in the prices. So I'm not seeing much change in the price in the second quarter, but going forward in the third and the fourth quarter, I would definitely expect a much improved pricing.
And finally, can you leave us with a guidance? What is the outlook on your top line as well as your profitability for FY19?
Well, I'm quite sure that we'll be able to do better than what we did last year by the year end. We have taken a lot of steps to improvise, shift from non-trade to trade, reduce our lead, and I'm very hopeful that in the course of next 2 to 3 quarters, we will be able to perform much better than last year.
All right, Mr. Chouksey, we'll let you go on that note. Appreciate you taking the time out and joining in, giving us a heads up on the numbers. Remember, the revenues came in muted. Margins have tempered down this time around due to the high cost environment. And you have seen an increase in the fuel and power prices as well.